All right. Let me go ahead. We are streaming. I will record it. Now let's start. Okay. What is going on, everybody? Welcome to another edition of Sunday Sermon, where we go over earnings and economic data, Fed speakers for the week, what we are watching from SPY, QQQ, IWM, ES, right? And then all of the other individual tickers to get everyone prepared for the week. As always, keep an open mind. Trade the levels, trades what is in front of you. Don't ever create a bias, because bias will bite you in the ass. I'm your host, Mr. Banks, along with No Risk, No Premium. What is up? What is happening?
What is up and what is happening, guys? Justin, thank you for the intro and stealing all of my shit. I will be trademarking that when we get off of this call. Guys, what is up? What's happening? Welcome to Sunday Sermon. If you know you're with the Wolves of Wealth, you're in the right place to be. But you know we're here on Sundays to what? We get ahead. If you're not trying to plan your week out on a Sunday, I hate to break it to you, but you're going to be behind. Somebody's getting a leg up from you on you, and someone's going to be stealing your lunch on Monday. All right, guys. If you're just joining us off of YouTube, first off, welcome, like, subscribe to the channel. Been getting awesome feedback on a lot of the market overview videos where we do our daily SPY, QQQ, and IWM trade plans. Hope you guys are helping you navigate the market, making some money on top of that as well. I know it helps the members in our group. If you want to join with us, trade with us live, and have some fun with us, link is in the bio. Have to do that. That's just good housekeeping. Let's get started now, guys. What do we have on the docket for this week coming up? First thing you want to do, always go straight to either Market Watch, or you can go to investing.com. You want to see what's going on this week, right? Like last week, we had a big week. We had the Jackson Hill Symposium. Could you imagine not knowing Thursday and Friday, not even having a clue that volatility on both those days was because of the Jackson Hole Symposium? Like, could you imagine actually trading blind like that? Right? That'd be horrible. I wouldn't wish that on my worst enemy. Right? I mean, you probably lose money. You had no idea we're going to get that type of volatility on those 2 days. And then even then, not even knowing that Powell's speaking. And we know Powell plays God in the market, right? You know, metaphorically, of course, he's not actually God. He doesn't actually buy and sell, but if he's speaking, the market's listening. Okay. So that's why we come here. I like to go to Market Watch on Mondays. Each individual day during the week, I will go to justinvesting.com. And here's why. You can go down, break it by the day. Right. And so let's say we want to go tomorrow. You'll get global news. So you'll get global data. That's always good, because if like the ECB, Europe Central Bank, or China's having a rate hike decision, or maybe they're having CPI data or whatever, something that will affect the global markets, you want to know, and that's coming as well. Okay, but just to get an overview on Sunday, I like to keep it right here. Okay, on the U.S. economic calendar from Market Watch Monday, big old nothing burger, kind of nice. No pre-market data, no data 30 minutes in, so we can allow the market to settle and not be waiting for data that comes out 30 minutes or an hour into the market open. On to Tuesday, though, the Case-Shiller Home Price Index going to be very, very, very important. The Fed has said we're likely going to raise rates again. Fed has also said it is more than likely there will be no more cuts or reductions until next year. That's still, what are we in August? That's 5 months away still, guys. Right? Or we got what? September, October, November, December. Okay, 4 months away, because we're pretty much at the end of August, right? So if we're going to continue to raise rates, the amount of demand, or people that are great candidates to acquire debt at such a high interest rate to buy homes, is likely going to lessen a little bit. And we haven't seen a decrease in the home prices or the real estate market really to the effect of what we kind of anticipated would happen when we raise rates. So these next 4 months, I believe, will be the most crucial 4 months for everything. Stocks, real estate, et cetera. We're going to really see here what's going to happen. We've got the debt's been downgraded, right? Fitch pretty much downgraded it, or they downgraded every bank out there. Is there going to be a credit crunch? Is there not? I don't know. But I'm going to keep a look, because if you're like me and you're interested in real estate and you want to be in real estate, you need to know what's going on with the home prices, right? So the real estate market will be important to watch. 9 a.m. on Monday, right? That's 30 minutes for the market open. Then we have some job openings data, 30 minutes, and consumer confidence index comes out 30 minutes after the market open. So Tuesday will be interesting. Obviously, no, what's going on with my mouse here? No, Fed speakers or anything like that. Wednesday, some more data, but the GDP, the revised GDP will be interesting to watch. Obviously, gross domestic product, that's how well our United States economy is doing. You should probably be paying attention to that. And then pending home sales. So we're going to get the home price index and then what sales are going to be going through in the future. Thursday and Friday, I believe, the most significant days this week. Jobless claims on Thursday going to be huge. We also have PCE. That's what Powell said that they're going to watch, right? That they're going to be watching more so PCE rather than CPI or PPI. So you think Thursday is going to be a big day? Abso-freaking-lutely. So Wednesday, if you're holding anything overnight, short dated, could really get affected on Thursday. Okay, so risk management 101, I wouldn't be betting the farm here on Wednesday night to the Thursday open. I will repeat, I will not be betting the farm Wednesday night to Thursday open. Okay, PCE data big, then Friday, big non-farm payrolls data, because they're still going to be looking at the jobs market in conjunction with the price of goods, i.e., PCE that we got coming out this week. So Monday to Wednesday, not that great as far as data comes out or anything that's exciting. Thursday and Friday, I do believe the pre-market data that comes out both those days will be very interesting to watch, and you want to keep your eye on it. On to the earnings. No mega cap, no big old blue chip stocks that are making, the Apples, the Amazon, Google's, Microsoft, blah, 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 et cetera, et cetera. Those, they've all reported. Now we have a lot of still big stocks, I believe, in the market that are all very interesting and to me trade very well. And premiums are usually inflated on these, are a little bit more expensive, but these stocks do move well and are very tradable stocks. Like CrowdStrike, right? CrowdStrike, Salesforce, okay, Best Buy, Dollar General, right? I do believe that there will be some setups after the earnings. Guys, remember, if you're a premium seller, you love earnings because the implied volatility goes up into the data event. Once the implied volatility goes up, you sell the premium collected up front, and then the premium gets killed after the earnings or the data comes out. Okay, that's where they make all their money. They're basically short. They're almost shorting where they're getting the premium up front, then they're buying it back for cheaper than what they sold it for. Okay, then they sold it for, close the position. So premium sellers love prior to earnings. Okay. Those people like us, for the most part, I'd say about 95% of people in the market, especially retail, like to be premium buyers, right? Or they're buying naked. They will have a better chance or odds of profit or percentage of profit, probability of profit after earnings. When that IV gets killed and the premiums in our flavor goes low, premium gets dropped down. And as long as we understand the direction where we're going, we could sell it higher if it goes in our direction. Right. So that's what it is, guys. That's why we tell you not to play earnings. First off, it's a fucking gamble. It doesn't matter. I don't care what anyone says. Nobody has a earnings strategy on anything short dated. Until someone proves me otherwise, that's fine. But if you're holding stuff long term, years and years out, that doesn't matter. I'm talking about weeklies, and they have 100% hit rate on earnings. Stay away from that person. Stay away. That is not who you want to be around. Okay, there is no risk management there. You might as well go to Vegas or bet it on the ponies or the Greyhounds, whatever your little thing is there. Okay, you can play both calls and puts on. That's what iPhone says in our chat here. You can lose on both of those if you're buying inflated premiums, though. Good try, didn't work. All right, so here we go. Lots of stocks you want to see here. Likely want to play them after. Want to see the move after. Remember, good earnings doesn't mean buyers step in, and bad earnings doesn't mean sellers step in. It just means you need to see where it trades after. Okay, i.e., Nvidia, right? Gaps up like 5,000 points, not really, but it gapped up huge and then sold all the way off. Okay, so there you go. Major, okay, major gamble there. So onto the charts here. For those of you that know, I go through ES, that's the S&P 500 futures. I go through SPY, is the S&P 500 cash ETF. I go through QQQ as Invesco, the tech ETF. And then I go through IWM. I pass it on to Justin, where he gets down to more of the individual names. But we like to give you a broad overview of the market here so you can have an understanding of what might possibly happen this week. Now, I'm going to give a shout out really quickly to all of my fib guys, anyone that's a fib person. There's one thing that I want to note that has been playing out really well here. Look how well from the low to the high, the 78.6 liquidity grab held. Okay. This held really nicely into here. Okay. So what level were we talking about on Friday that we see we could squeeze to? We went right to our 50%. Remember, we talked about 44.25 all the way up to 44.40, 44.60 after that. Those are just major levels in the market. And they also happen to be now. Whoa, the hell just happened? Okay, they happen to be big levels on now these percentage pullbacks here. So I'm not going to tell you I'm like overly bullish or anything, but what have we done here? Like just from a chart technical standpoint. Okay, we bottomed out, big sell, big bounce. We made a lower high. Okay, but we did make a higher low right here. Now, I'm not saying we're going back to 4,600. I'm not saying that at all, right? Like, I'm not going to tell you just to buy calls tomorrow at open. No, but we did make a higher low here and we held up major levels. So for me, I'm going to be watching 4,400 tomorrow. Okay, we watching 4,400 tomorrow. That's going to be a big level. Okay, I think as long as that level holds, we could go right back to Friday's highs and then make our way back up to our levels, 44.40, 44.60 above there. Now, if we can see the little gold, whoa, what the heck? Sorry, the little golden pocket that we got here, golden retrace zone that you all should know about on the FIB is where 44.40 to 44.60. God, it's like magic, right? It's like magic right there. That zone initially on the first touch, I'm not going to be looking for a breakout here, to be honest. I'm going to keep this highlighted zone open to say, look, this is an area where we could easily reject up in here. Okay, look at this area. But if the price just fucking runs and we get back and break highs, then you get long. That's all you do. But for me, I think the safer play is to look to buy the dip as long as 4,400 holds. 4,400 holds, 44.20, 44.40, 44.60. Levels are really straightforward here. Okay, we have to get underneath 2 weeks ago low for me to get overly bearish here. Okay, because under 35.50, I think just 3,500 comes. The gap from the contract roll is 35.20. I think it's just going to rip through that. We're going to drop right on down to 4,300. Okay, but I'll get bear when I need to get bear. That's going to be on the break of not last week's low, but the previous week's low, but below that. You can see it right here. Okay, if that breaks, or if we can get up to our reject zone, I like 40. I really like 44.40 to 44.60. I like that level of the 61 between the 61.8 and the 78.6. Plus, it's also a major reject zone. Like, do you not think that there might be some sellers just sitting in here, like waiting to sell more? Right? Very possible. Very possible. Okay. So that's my ES for you. So looking to long anything above 4,400 tomorrow, you're going to target 44.20, 44.40, 44.60. Once you get up to about 44.50, between 44.50, 44.60, where we saw this major reject here, I'd be looking at shorts. I'd be looking at shorts up here. Okay. On to the SPY chart. Oop, a little zoomed in for you guys. It's pretty much my analysis is going to be very similar to the ES, right? This is just a direct representation of the cash ETF. So they're going to move almost identical. I'm not going to say identical. Guys, if you're trading ES, watch the ES chart. If you're trading SPY, you can trade SPY with the ES chart. But I would also have that chart up as well. Just so you guys know, my second screen looks like this. I have ES up top, SPY down low. Okay, I have the 15-minute here on ES with the level 2, and then I also have the ladder in here. So I have a lot of data that is only the S&P 500 futures and SPY. That's it, okay? Hopefully you guys saw that I didn't mess up the feed or anything. Okay, back to my chart here, which is just the SPY chart on the 4-hour. Okay, we can see 435 held. I'm not going to get bearish until we break this 432. Underneath 432, yes, then we're going back down to 430. ES was what, 4,300, I said? Okay, yeah, I'm thinking 430. Underneath 433, though. Underneath 433. Okay, have to break underneath there. Until then, 436.50 is going to be that area I'm going to watch dips into. Okay, but if we can hold above 439, 440, which is basically now kind of like 4,400 on ES, if those dips hold, 442 is in the making. 442 up to 444. 442 up to 444 is like your 44, 40, 44, 60 area on ES. It's going to be very similar up here. Okay, I would initially be watching to see if we're going to get a reject up there on the first attempt. I like longs above 439 to hold. I like that to hold tomorrow. No lower than 436.50, but I like the longs above 439 to hold. Target 442.50. After that, 444, 445, I look at the rejection there initially. If we get up and break this high of the day at 446, just buy calls, turn off your computer, and sell at 448. Okay, there you go. QQQ, Tech World, what's going on in tech land? as you can see, the levels on QQQ have been, in my opinion, they've been respecting a little bit better than SPY, just a little bit better, but both of them have been awesomely tradable. Okay, awesomely tradable. Look, 360 held. 360 held. So this is going to be this 362. I want 362 to hold, but really I need to get above 365. Above 365, I believe it's 368, and then you're going to watch 370 to 372. I think you could watch for an initial rejection in there, kind of like you would do on SPY and ES, like I was just saying. Okay, because we dropped out of the goddamn sky, right? 372 to 350, to 360. That's 12 points in the day. So if we get back up there and we get up there, if we get up there fast, I would definitely be watching for the reject from 372 to 373. Absolutely. But as long as we stay above 362 or break and hold above this 365, watch 368, 370, 372 above then. If we get below that 2 weeks ago low now, 355, I think we have room to fall all the way down here, 348 to 350. If you just zoom out and look left, you can see exactly where you think we're going to bounce. Buyers will more than likely defend that level because look at the demand bounce off that area. All righty. So that's QQQ. Last but not least, IWM, redheaded stepchild of the market, I like to call it. But it's a great risk on factor, great risk on analysis to see what the rest of the market is doing. As we can see, we have been building out now this new little balance zone in here. Okay. We are now showing, okay, we had a little look above and fail. We've had some dip buys into this 182 area. Okay, 181.50-ish, but really 182 has been holding. Anytime you get down to this area of interest, or guys, remember, the market isn't down to the cent. If it was that easy, we could just set buys literally to the cent and sells to the cent, and we would be fucking rich. You have to be a trader. You have to be a trader. You had to have seen on Friday, okay, last time we were down here, what happened? Look at this long wick on the 4-hour. They're buyers down there. So when we ripped down there in the morning on Friday, I wouldn't have been looking short here. I short up here, sure. Not short down here. I'm looking for the bounce. It did exactly that. So where'd it go? Right back to the reject zone. Go figure. That's why it's a balance zone. If it touches the bottom and it doesn't break through, it's likely you're just going to go back and touch the top. If it touches the top and doesn't get through, it's like you're going to go back down and touch the bottom. That's why it's balanced. The market is balancing. The buyers and sellers are balancing. Once it breaks that zone is when you want to take the directional trade. So for me, I still think as long as 180, 150 to 182 holds, you're going to want to target this 185. Now, because we have this little called a look above and fail or a failed breakout, you know, if Friday's high breaks, you could take the long trade up to 186.25. You got $1.25 of upside. It's not bad for the options if you're trading short dated stuff, but I would absolutely take 90% of my position off at 186.50. 186.50 you're off. Now we break above that 188, 189 from there. Okay, underneath. Now let's say we break this weekly low, weekly double bottom. Okay, we break 181.85. I'm going to come back and look at this balance zone. Okay. You always ask, how do you find that level? How do you find that? Zoom out and look left. Get on a higher time frame. Zoom out. What happened the last time we were here? Remember, candlesticks is just a representation of the battle between buyers and sellers for that time period. That's it. Simplify it, guys. Don't do too much. Last time we were down here at 189.50. What happened? Huge bounce. Huge bounce. Okay, well, same fucking thing I'm going to be looking at then. 179.50. If we get down there underneath 181.50, there's a short trade 2 points to the downside. Sure, you could take it. You could also be patient and wait, and high probability of a bounce at 189.50 to 180. That's what I'll be looking at. All right, guys, that is all I got for you. I hope that helps. If you guys liked it, give me some comments give me some feedback later in the week on the channel. Tell me how it's going for you guys. But Justin is going to come on and give us some individual names. Justin, what's up, brother? What do you got for us?
What's going on, guys? Good week ahead.
Great week.
Let's stay patient as always. Wait for one trade.
Okay.
Everyone can see my screen now. Yep. Going on to just zooming out and looking left. My first stock that we're going to be going over is AMD, but I wanted to point this out as finding levels, like where do things bounce? Let's take a look at the weekly here. Look at what this did. Look at these levels. I mean, to a T, guys, if you just zoom out and look left, I know we get really zoomed in on like the 5-minute chart, the 10-minute chart, but look at how perfect these levels are. When you see the dotted line of where we stopped, right? Where the body of the candle is, look at that. I mean, come on. It doesn't get any cleaner than that. I'm on the weekly right now. Look at how perfect these levels have played out, right? The wick down for that retest here. And then the body closed, we're at that wick, right? It's not rocket science. We don't just make up levels and say, they don't come magically. We zoom out constantly, right? Zoom out, look left. That will show you a lot of times where the levels are at, bigger time frames. Let's use them, right? Let's start to use them. For this week on AMD, though, I am watching a couple different things. So let's go back to the daily here. Do you have a couple of those? Going back to the daily, we have this huge 100, right? 100 level here as the huge demand, right? 100 is a huge psychological level. It's a huge demand level. We held it, right? We came down, we held it. So this week, I'm looking at a couple things. A lot of plays this week are going to be either or, meaning it could go to the downside or we're going to play it to the upside, or it could be both, right? We're kind of in this position of where we've sold off. We're kind of got a little bounce on Friday, but is it possible that we keep selling off next week, or do we get a continuation bounce back up, right? We got to be prepared for either way. That's what I mean. Don't come in with a bias. There's going to be a move either way. Be planned for either way, right? So this week on AMD, I'm looking for this 100 to around 90, 99, 95, 50 to 99 level to hold. So I want this level to hold here, right? For a bounce, get retested, get a bounce to get long, catch everyone who's trying to get short, and then they run it back up, right? So that'll be my first level. 100 down to about 99 will be my level to hold. Below 99, I will be looking at around 97.60. Let me go ahead and take this off just to make it cleaner for you guys. So, all right. Let me make it cleaner for you. All right. Below 99, I think we could go see 97.50, 97.60 if you want to call it right here. Nice little imbalance that we could go fill. Below 97.60, I'd be looking at 95 to be retested, and below 95, I'd be looking at 92 all the way down to 90. So if we go ahead and take a look at the weekly again here, we have this imbalance to fill all the way down to 95, and then essentially down to 90 if we really want to get all the way low to fill those imbalances, right? So that'd be if AMD does decide to get weak. Another thing I want you guys to be looking at is going to be the SMA. Let's just change this to 200 really quick. Right, look at the 200. Where's the 200 at on AMD here? Well, what do you know? Right at our 92 level. Surprise, surprise, right? Surprise, surprise. Use the SMA on the daily. So potentially if we do decide to get weak, I would be looking for that 200 to get tested at some point. Now, does that mean this week we're just going to fly right all the way down to 92? No, we possibly could get weak, bounce around these levels, and then this SMA comes kind of back up to 95, and that's where it gets tested maybe the next week or the week after, right? But looking ultimately for this 200 to get tested if we do decide to get weak here. So let me go over that one more time. Looking at 100 to 99 to hold for a bounce, right? A little double bottom bounce. If we decide to get weak below 99, we'll be looking around 97.60 here, 95, and then 92 for the ultimate drawdown there. Okay. Any upside, I'll be playing it day by day, but really need to wait. I really like the upside if we get a back above 103.50. That's where I'd like to take some upside. And then obviously we have these imbalances fill, could go back to 105 and ultimately up to 107.50 upside. But I really need 103.50 to be recaptured here to take anything long on AMD.
At 100 looks like a straight liquidity grab right there. So
it does.
we have
Absolutely.
continuation
Boom.
up. That's definitely just trapped all the sellers down there. Yep.
Absolutely. Because everyone gets short, right? Everyone has their stop losses on around 100, around right below 100. Retail, right? Gonna have their stop losses there. Went down, grabbed it, huge push back up here. So now do we get up another push to 103.50 and then another push back up and we hit higher? Very possible. But we can also see where we stopped at and why this level is so big. If you just look left, right? Huge support level getting retested as resistance, right? This isn't magic. It's very simple if you make trading simple, right? Trading is a very simple concept. Support, turn to resistance. Super simple, right? Just look left. Not that hard. Disney is going to be my next one. Let's go ahead and take a look at the bigger picture here again. Let's go to the weekly. Disney go woke, you go broke, right? That's exactly what's happening with Disney right now. Getting all the way down to 80, which would be the 2022 and 2014 levels, as we can see here. So 2014 lows, 2022 or 2020 COVID crash lows. Are we going to approach it? Are we going to get retested it? Very possible, right? Very possible we go and retest that 80. So zooming in a little bit on the 1 hour time frame, looking at either or. Either we break through that low that we created on Thursday, that 82.30. We could go and test those lows, would be around that 80 level that I just showed you, right? Technically it's 79, like 69, but 80, right? We'll just call it 80. So if we break 82.30, potentially go touch the 2020 to 2014 lows there at around 80. There I'd probably look to take a bounce. I think that would absolutely get held and demand would be there for that. So this week, either looking for a break and hold below this 82.30, looking for a double bottom bounce. So we can either break a hold below or we double bottom bounce because everyone wants to get short. So what do market makers do? They kind of bring us below a little bit and then we bounce all the way back up to 84. Seen it happen a million times. 84 will be my level, first level to reject. So I'll be looking for a reject there first if you want to continue to stay weak. We're break and hold above 84. If we do that, I would be looking to take it long up to 85, 86, and 87 would be my levels to the upside. So again, below that 82.30 level, if we go ahead and take a look, I would go see the retest of below this demand zone. Where the 2020 low is and the 2014 low is around 80, right? So it needs to break that 82.30. And or we double bottom, right? Or we come back. Everyone wants to get short here, kind of brings us low. Double bottom brings us back up to that 84 level. 84 looking for a reject if we decide to just come up and get weak, or break and hold. Are we targeting 85, 86, and 87 there on Walt Disney? Next one is going to be Amazon here. So Amazon, another either or. Again, zooming out, right? What do? We zoom out, zoom out, zoom out to get that tattooed in your eyelids. For zooming out, what do we see here? Master trend line. Look at this master trend line. 1, 2, 3 touches on this Amazon trend line on the daily there, right? On the daily there, holding there as support. So this week, does this master trend line dating back to March of 2023 on this uptrend still holds and we head higher? I don't know, very possible, but I'm going to be looking at either or this week. So this week, for the upside, I will be looking at a break and hold of this 134 level up here. You can see there's huge support, right? Turn resistance. So it'd be a support resistance flip right here at 134 here. Sorry, 134 right here. If we break and hold that, I would go look to take long to 134.66, about 135 to 135.50, 136. And ultimately, if we decide to get super strong, it's obviously going to back test this all the way to the top, and the top would be around 137 to 138. But I need that 134 break and hold first for me to get long there. Kind of looking like a bull flag that we created on Friday. So let's see if that holds and we head higher. Now, if we decide to get weak, I am looking at this 130.60 level. You can call it 130 to break and hold to the downside. Still have this imbalance to fill all the way down. So if we do break and hold this level right here, 130.60, 130, I think we'll most likely sell off. Now, we could say there's a lot of demand here, but I think we'll sell through this demand as supply. I think this demand is really going to sell through as supply if we come down and retest it. If that's the case, I will be looking around 128.60, call it 128.50, 127.50, 127, and then all the way down to 126, 125. So some big levels that we could sell through supply if Amazon decides to get really weak here and tech decides to sell off. But ultimately, at least go and touch that 128.50, 128 level if we do decide to break this 130.60 level here. Next on the list is going to be XPEV. It's going to be sympathy play to NEO, right? Sympathy play to NEO. So pretty good setup here. I'm going to go to take this 200 because I don't need this anymore. So what I'm looking for, if you guys take a look, you heard it right, zoomed out, right? Had this massive flag into this demand, and now we're pushing up. Had a hell of a day on Friday. Let's go back down to the 1 hour here. Super strength going into this week. So this week I am watching for either this 18, huge level here, right? Huge support, turn resistance. All right, so you can see it's support. Then once we rejected that, we went and created the new low here. So 18 is a pretty huge level. Either we reject it back down and we can't break through and we could take a short there, or we break and hold. We're looking for targets of 19 and 20. 19 and 20 to the upside, right? Support, resistance, you could see it clear as day, be my first target. And likewise, support, resistance, clear as day to 20 to the upside if we can break and hold 18. Would love a back test of this 17 level right here. Come back test 17. Now, it doesn't have to be 17 exactly. Obviously, we can get like 1730, 1725, anywhere in there of a nice back test to head higher. But 18 would be my ultimate level to be looking at. Back test of that 17 level, 18 the break and hold, 19 and 20 there. Neo, I believe, is on Tuesday this week. A couple plays I'm also looking at. Chris, you also said that there was China news over the weekend. I believe that is correct.
Yes. Deduction on capital gains. Deduction on capital gains for the China market would be a bullish factor, right? Because it would suck more people into think in the long term you don't have to pay as many taxes on it. That's the ideal thinking. Now, could it not happen? Sure. If the US did it, if the US wanted to play along and deduct capital gains, I don't think they're going to do that. But if they did, that'd be bullish for the US for sure. But for China, absolutely. If we get a big old gap up on China names, then yeah, the buyer stepped in. You'll know instantly tomorrow morning.
Yeah, so pretty big news there. So I think China names have kind of been thrown in the garbage, at least for right now. We were looking for some pretty bigger moves up, but then they've just been selling off, right? Obviously, there's some bad news coming out of China, but let's see if this news can actually take us back up. If we look at JD, I like this one. We look at the weekly. I mean, what is this? Breakout, retest, right? I mean, we have 1, 2, 3. Technically, just for this year alone, this would be a double bottom here on this level, but it is a multiple bottom dating back to 2019, where we had the huge run all the way to the top. That is a breakout and a retest level, right? So do we hold this level, right? There's a huge demand here. Do we hold? Is that news going to send us back up? So I will be watching JD possibly for a swing back up to 40 here this week, right? So this might be a swing play. Might play intraday as well. I'll let you guys know when I get into the watch list. But definitely looking at possible swing here for JD. Baba is kind of in the same point too, right? Baba's kind of in the same, right? Getting some big demand here, some huge demand here. We're holding. Does Baba now swing up too? Just keep an eye on those China names just because of that news. Could give us some good plays. I think everyone kind of has taken their eyes off of the China names. This would be the actual point where they start to run, since everyone is not even looking at them anymore. Next one is going to be an equity trade. It's called Charge Point. It is an EV charging station. I like this one a lot. Super oversold. Lowest mark it has been since it IPO'd in 2021. This is a long-term hold. So this would be a hold that you put in your Roth or long-term swings for 5 to 10 years plus. This isn't a week swing. This isn't a month swing. Now, if we get a bounce back up to 8 within a month, by all means, go ahead, take your profits, right? But if you are going to take this trade, this is a long-term trade. I will DCA into it. This is a set it and forget it 5+, 10+ year hold. So if you guys do take it, don't be coming in every day. Oh, charge points are here, charge points here. Guys, it's a 5-year hold. Shut up about it, set it and forget it. If you can't do that, don't take it. Next one on the list is going to be Roblox, hitting a huge demand here. I mean, huge demand. Looking to swing this one, right? Super oversold as well. Also looking to swing this one for a possible back test to 30. So I think I will be starting a swing here this week that I will average down into possibly as well. But I do like Roblox here for a nice little swing, at least back up to the upside to around 30 there. And that is all I got. Guys, again, if you are taking swings, separate account, it's not going to be in the same account as your day trading. Make a totally separate account for your swings so you're not looking at them every single day, especially if you're taking a swing that's dated, a couple months out, or it's 2024, you're taking a leap, or 2025. You should not be talking about it ever. Don't talk about it. Just let it sit, let it cook. That's what these kids call it today, cooking, whatever. I don't know what you guys call it. And let it play out, right? Let it play out. Okay. Different count. Let swings play out. Don't sit there and stress over it every single day. It's not what you do when you swing. If you can't handle that, don't swing. This week, stay patient, right? It's one trade at a time. It is always one trade at a time. Let's look to execute good trades. Let's not look to make money. If you execute a good trade, the money always follows. In business, if you create a good product, the product will sell, the money always follows. The people who go into business to just make money, they have failure businesses and they give up, right? Because they don't focus on the product, and their product shit, and now their business fails. Focus on the product. When it comes to trading, focus on the execution. The money will always follow. Love you guys. I will see you guys bright and early for pre-market huddle. Let's have a great week.